Good morning. This is Wednesday, November 19, 2025, and uh, this is gold trading recording of a London opening session, uh, London AM session. So we're going to trade gold only, and gold. This is the technical overview for gold. At the moment, it is 1:19, so 19 past 1 a.m. New York time. The London session starts at 2 a.m. 2 a.m. New York time. Actually, Frankfurt Open starts at 2 a.m. London starts at 3, but the London session includes Frankfurt, so it starts and the trading is possible from 2 o'clock a.m. So we are daily chart. Daily chart is bullish. We are swing is bullish. We are doing pullback. We mitigated 50% of the range, and now we rebounded from it with a pretty strong reaction. Then we mitigated. We swept liquidity. We mitigated the extreme supply, and we mitigated 61.8% retracement. From that, we went down. So we are going down until yesterday, at the beginning of this week, where we reached the demand in discount, which is very well priced. And this high probability demand provided the reaction that was yesterday and today. We see the reaction. So as you can see, the ticks. So we here we achieved the bull's objective, local bull's objective. Then we went down and we achieved the bear's objective, which is this demand. There is another bear's objective waiting even lower, which is the liquidity, daily liquidity of all of these lows here. This is very strong liquidity that bears may have an appetite to grab sooner or later. So the question now is, if we are going to reverse, if we are going to reverse and grab the liquidity and maybe mitigate the demand around 61.8% retracement, or before we do that, or if we don't do that, we are going to be interested in previous week highs mitigation first, maybe ultimately making new highs. So we have two scenarios, bull and bear, as always. Bull and bear scenarios. Which is stronger now? Which scenario is stronger? As you can see, there are magnets down, but there are no magnets up. We don't have any higher magnets here. From technical point of view, we have only lower magnets. There's no supply here yet because we didn't break any significant level, so there's no supply here. This supply was mitigated, so it is done, strictly speaking. Even though it's a wide one, it is not considered as a strong magnet, so I don't even bother to put a magnet. So from technical level, from technical view, there are only bearish magnets here: liquidity and demand. What is interesting is the fundamentals that today is formed for FOMC minutes, and tomorrow is NFP. On Thursday, after government shutdown finished, they are releasing NFP data exceptionally on Thursday, just to catch up with the data release. So it means that we might be driven by fundamentals a lot today and tomorrow. So any technical higher time frame view might be misleading, and we will be just following the lower time frame um, order flow. So if we didn't have any fundamentals behind waiting for us, I would be rather be favoring sales because of bigger um, magnet. But because we have fundamentals, I would really don't really bother much about the markets. We will just follow the fundamental outcome. We'll just follow the not fundamental outcome. We'll just follow the market. The market will show us direction. Okay, and here we are. We're going from the daily into 1 hour. So 1 hour is um, so 1 hour is let me just make it a little bit lower. Okay, so 1 hour is a bearish. The swing is bearish. 1 hour swing is bearish. And let me here daily pullback. 1 hour day it's bearish and but also pullback. Okay, and 1 hour swing is pullback, bearish pullback. We have also order flow. So let's see what is the immediate order flow. Yesterday, what happened yesterday? We continue lower lows, lower highs until we reach high probability demand and 1H daily demand, which drove us to which provided a pretty strong reaction, especially at London yesterday and later opening for New York. Here we have previous day high, previous day low, so it's quite bullish day, right? From here till there. And at the moment, in a pre-market, pre-London market, we have made a quite strong reaction here after Asia, which was pretty ranging. The Asia was ranging, but the first hour after Asia provided a really strong reaction from some reasons, and we are going to classify as bullish order flow there. I mean, it was since yesterday, but it made another higher high, and we are changing. Sorry, and we are continuing with the bullish order flow. I will not bother with this. I'll just put bullish order flow here, and exactly that will be here. So we have bullish order flow. We have together with the bullish order flow, we have 1 hour demand. Okay, so 1 hour swing is bearish. Let me just write down. But 1 hour order flow is bullish. So it's a pullback. We are close to change the trend into bullish, but we are still in the bearish trend on 1H until we change it. The 1 hour order flow is bullish though, so this is very important information for our daily bias. And our daily bias is so what happened here with liquidity? Liquidity is broken here, and there is only one liquidity left before we break. Okay, this liquidity was broken. That's going to be 1H taken. This liquidity is broken here. And there is only one level left, but still this is strong. This is strong magnet for bulls. Okay, this liquidity that is above this high and also above this high here. So let's classify this. Do we have any magnets here? Yeah, there is a magnet here. Okay. You remember this daily liquidity here? It's pretty strong magnet. And we have one magnet here. We have one magnet here. And then we have the opposite magnet, which is the attraction for bulls here. And we have a magnet here. So we have a couple of contradictory magnets. Now, we are half an hour before London Open, so we can either go high, we can go up or down, or we can range, right? So let me just visualize that. Okay, first range, so we can just range. Then we can go higher, and the motivation will be first magnet, which is the liquidity. So we can break it, and then we would be interested to take this, right? To take this or to mitigate this supply here. Right? So we have a bull scenario and we have bear scenario, which is actually mitigating this demand. We are looking for the session scenario. So for bears, only mitigation of this demand. But once this demand is mitigated, it is the order flow is bullish, and we don't want to trade against the order flow. And we don't. I mean, we do want, but we need to have strong convictions. In general, we want to trade with immediate order flow, which is bullish, and when the demand is mitigated, naturally we'll be looking for buys. So what would be the bias? If there is a range here, the range continue and finally it will finish with mitigation, maybe with demand mitigation. When demand is mitigated again, we'll be looking for longs. So basically there's nothing else for us than longs, I guess. Do we have any convictions of sells? Okay, so there is this liquidity, but having this strong reaction here, would it be reasonable for London to push it down all the way down here? Rather the economic data that is on New York later in the evening, so closer to New York session close. So that would probably these two magnets would probably be applicable for New York. I'm talking about this for bulls and this for bears. Okay, so we'll be focusing only on two magnets, two closest magnets. Okay, what I'm gonna do for the time being, I'm gonna remove these magnets and I'm gonna leave only the closest magnets. Let me just remove the drawings and then remove the magnets. Yeah, this is it. That's basically it. We have liquidity here as well. We have 1H liquidity here, but it has already swept the liquidity here. So would it sweep again? The liquidity is better here. Okay, this one didn't sweep the liquidity. So this is better liquidity to target if we change the order flow. But as long as the order flow is bullish, we are looking for buys. So in this case, we have pretty reasonable idea, I think, to look for buys. If the market continue lower, finally it will mitigate this demand and we'll be looking for buys. Not so high, okay, here. And then if we go sideways, we'll also be looking for mitigation of this level or some kind of mitigation of some kind of manipulation and then trying to buy. And then for bulls, if it continues, we'll try to catch some maybe local move here, somewhere here, because it's a pro order flow, pro bias. Okay, we'll be looking for some local buys, so short, quick buys, but ideally buying from this demand. And this is the scenario for London opening. Okay, so 1H is bearish. As you can see here, this range, we're interested and we're going to enlarge only this range. This is 1H, it's bearish, but we mitigated, it was bearish to mitigate, we assumed that it was bearish to mitigate this demand that we are actually jumping from. Now we are jumping from this trampoline, and then we are creating a pretty good momentum this morning at the manipulation session, especially with this candle, and we are waiting for the mitigation of this demand. Can we consider quick shorts towards this demand? I don't think so, because 1 hour order flow is bullish and 1H bias is bullish too. So my bias is bullish. So when I am shorting here, I will be against my bias against immediate order flow. This is immediate order flow here. And I may be looking for quick shorts or longer shorts after the market develops. So I can look for some kind of pullback signals after grabbing all of that liquidity. Okay, and then trying to short. Okay, but only after grabbing this liquidity I can look for shorts. Without grabbing this liquidity, I will not be looking for shorts. Without grabbing this liquidity, when the price breaks this demand, then I will change my bias for neutral or bearish, and then I'll be looking for shorts maybe. This is the key level for me for today, London session. The key level of 4081, 4064. Okay, that's it. I'm gonna reconnect just before Frankfurt Open, which is London Open, just before 2 a.m. New York time. Cheers for now. So Frankfurt Open just started. This is 4th minute after Frankfurt Open, which is 2 a.m., 4 minutes past 2 a.m. New York time. And we are on 1 hour chart, and we have 1 hour guidelines, reference, how we approach the session. So 1 hour swing is bearish, but we have a pullback, and the pullback is continuing as if wanted to break the structure of the swing, which is changing the trend. Anyway, the pullback is overstretched and it has a bullish character with a huge bullish candle here. But we are interested in the moment where we are now, and we are in the moment between this demand here and the liquidity, strong liquidity up. So we have order flow bullish. Our bias is bullish because we don't want to really trade at this moment of the market. We want to trade from this demand if the price reaches it. If the price doesn't reach it, we want to trade bull until we grab this liquidity. So let's start from this text. Buys from this level, especially attractive when buy-side liquidity is not swept yet. So if this is not swept and the price reverses, then we'll be buying from here. Sells only after breaking this demand. So if demand breaks and if we see order flow shift, then we'll be reassessing. We also want to remember that down below is a huge daily sell side liquidity pool attracting higher time frame sells. So I'm talking about this. Okay, so the price has a motivation to go lower, but we are not sure when. Is it now or later? For now, we have only these two magnets at our attention, and both magnets are implying the buys. This liquidity is a strong magnet for buyers. Consider selling after sweeping all of this liquidity. So if it swept, I will consider selling. I will reassess and consider selling. At the moment we are here reversing, hopefully we will see, not hopefully, whatever happens, we will see a reaction towards this demand and then we will be buying from here, targeting this liquidity. Okay, this is the best the most optimal solution for this session. So this is 1 hour, and this is the reference, and I will be trading according to 1 hour. And now we move to M15 to lower time frame. Our M5 is the execution, but we don't want to look at it until something happens for us in the higher time frame. In the higher time frame, as you can see, this is M15. And we look only at Asia. We focus on Asia, and Asia session started here, and it's ranging until this after Asia session manipulation part where we just smashed Asia's high. We grabbed all the liquidity on the left, and we left a nice demand level here. Okay, so this is the demand with 1 hour order flow we are interested to buy from, and we will be observing the moment we reach this demand, we will be going to lower time frame to look for any buy opportunity setups. For now, we consider only one setup, which is called Photon Pro. Photon Pro is a setup that is the setup uh, that requires the environment of two things. Uh, immediate order flow must be bullish or the same direction as bias. So our session bias is bullish and immediate order flow is bullish. So we are bullish. Okay. Um, yeah. So that will be our session bias, and we will be looking for some kind of moment where we could buy from here. We will see if this happens. If not, we will be still considering Photon Pro, but we'll be doing it after, let's say now we are retraced and we are going to break this high. At the same time, I will have a new fresh demand here where we could consider looking for buy. Okay, very simple, very straightforward. And then we break another high, and then we have another fresh demand to buy from, and so on and so forth. Ideally, after some liquidity sweeps on the way, so there's more complicated or more complex, I would say. But these are two scenarios for buys for us, and we are just observing. Okay? So we're observing if we mitigate this level. When we mitigate this level, I'm going to come back with a stream. It's been the first half an hour of Frankfurt Open, so this is it's 2:33 a.m. New York time, Eastern time, and we are still in the middle of nowhere. We are trying to mitigate this demand that we'll be looking for buys. Ideally, I would like to see M5 mitigation, M5 POI mitigation. Okay, let's put it here as well. Let's put all of this level, okay, put all of it. Um, but we are also ready to trade from 1H POI. If it isn't mitigated, then treating, we'll be just following immediate order flow on M15. So section up, section down, section up, section down, and then when we break this M5 choke, then we'll be looking for some, sorry, M15 choke, we'll be looking for some small correction and then buying at that correction. So I want to catch this move, very, very short move. Yeah, that's right. How does it look like M5? M5, it looks pretty bullish. A, B, C, or 1, 2, 3, 4, and then the last wave, number 5, we'll see. M15 is a little bit lower on M5. M15 is lower on M5 because, sorry, M5 choke is lower. M15 choke is here. Then this is M15. This is M5. So now we have stronger reaction. We're coming in the second half an hour in the third and 15 minutes after Frankfurt Open. There is a minor liquidity here, minor liquidity pool that might be used, maybe, perhaps, as motivation for bears to mitigate this demand. If not, we'll just follow. We'll just follow immediate order flow with the fresh M5 demands. Fresh M15 demands. So the fresh M15 demand will be done here. So M5 we don't want to look for now. We will make M15 full screen, and then we will be waiting for the market development. As you can see here, these two areas, these two triangles, they imply kind of corrections. And then we can copy them and make them impulses for these moves. Yeah, and we'll put them behind candles so that everything is nice and visible. So we already see a quite strong reaction here. We are getting out of nowhere, so we are actually reacting out of nowhere. I don't know if this is long-lasting reaction or this is just a minor reaction, and the proper reaction will be from the demand. We are just going higher from previous day high, which is not attractive. Ideally, we would like to trade inside previous day range. And this is previous day high and previous day low. So this is the daily move. Now we are above daily. So yeah. Okay, this is, I want to have it here. Buys only. London bias is bullish. 1 hour order flow is bullish. There are two buys, two bullish, and there is no space for sells. So direction is bullish. Now the execution of the bullish. We want to buy from specific level. The Asia high for the breakout is already broken out. So we could try to break out from here because I didn't really mark it as Judas. Here. Here is Judas. Yeah, this one here. Oh, okay. This is the last swing before Frankfurt Open. I'm gonna move it here. So this is the last swing before Frankfurt Open. Okay. Oh, nice. We are pushing higher. And then when we break, we just remove this Judas high and low because Judas high and low is used for identifying the closest manipulation level pre-Frankfurt. So this is the closest manipulation, but Judas, as the name implies, it is the betrayal. So it's a fake friend, and it's a fake out. So Judas is normally used to identify fake out. So we break this. Why can't I draw here? We break this Judas, and then we're looking for fake out. So coming back and then selling at the and opposite. That would be very nice. Fake out here if we break down from down, then went back and then buying from here. But for today, for very bullish character, I don't know if Judas is working, especially this top one. I'm gonna remove it. It's not useful. I'm not gonna use it because that would be useful for cells. But since cells are not considered, there's no point to really put anything on our screen. We're focusing on the last. Really focusing on the last. Can we project it in this way or not? Where's the liquidity from here? Okay, so we have M15 choke already, M5 choke here, we have M15 choke, and we'll be looking for buys now from fresh BOI. Okay, so this liquidity, 1H liquidity, I'm gonna sync it. So I'm gonna show it on M15, and this I'm gonna sync it also. So we have text, right? 1H swing week high, and on the right, yeah. And this is 1H liquidity. So the last pool that is left also will go to the right. Okay, so M15, let's come back to M15 again. Full screen, and we have M15 choke, and together with the choke, okay, so this is our target here. As long as it's not swept, it's not reached, we are very interested to pursue this target. We will see. Now we're looking for the reaction. So we have fresh demand on M15. Let's borrow this. And this is the fresh demand. Can we go lower? Yes. We will go lower here. That will be our fresh demand. This is the inside bar. It's a very nice demand on M5 also. It should look nice. So we go to M5 and we'll be looking for reaction towards this demand or reaction inside this demand for buys. We are going to minimize the higher time frame and on the lower time frame. So we have M5 and M15. And this is M5. Okay. So we are looking for a nice reaction here. First of all, do we see any fair value gaps? Fair value gaps from here. There is a fair value gap between this and then between this candle and this. Okay. So we have a strong reaction. We have a break of structure. We also broke this M15. So this is M5. This is M15. Maybe I can just make it visible here. Text M15. Choke. I need to make it manually. Yeah, it's done as well. Change of character. Okay. Now, okay. That's all that we need to do. Just wait for some kind of setup. Do we see any inducement on the left? So it's called LID, lid, leg inducements. Do we see any level that we can break before we buy? Sorry, we can sweep before we buy. So of course, one is here at the bottom, but there is another here. So it would be pretty reasonable to buy at rather extreme of this of this um, of this range. Let's see also the Fibonacci so that we could identify. And this is why do I use Fibonacci? I use Fibonacci to identify the pricing if something is cheap or expensive. So for buys, what would be cheap? Cheap would be everything that is below 50%, and gold especially like 61.8. So the cheaper, the more attractive it is for buyers. So, and everything that is above 50% is expensive. So for buyers, like we go to supermarket, we don't want to buy expensive things, right? I mean, we when we go to supermarket, we want to save, buy two, get one for free, so on. So this is the area we want to buy when something is cheap. Okay, nice. Maybe we'll not be able to buy anything today. We will see. Okay, nice. Sellers are coming in. There is a big liquidity pool here. I mean, big. It's a lower time frame. It's a minor liquidity pool that is being swept at the moment. But this is here M15, most important. 1H liquidity sweep. A liquidity that is above and 1H swing quick high. This is the motivation for bulls. For bears, no motivation to go lower. for bears. This daily liquidity, but look where we are on daily. So can we go straight away here? Yes, of course we can. Of course we can. Of course we can. Or we decide to push it a little bit higher and then go back. Or we decide to push it even higher and then go back. Or we decide to break previous week high and then attack the highest of all time. Nobody knows. When we don't care, we care about what is here and now, which is M15. We want to follow this order flow. We want to buy here and buy somewhere here, sell here. So 5R. Isn't it beautiful? Also 5R. I put the buy more or less at 61.8. Here, very, very, very challenging to put stop loss because there are two liquidity sweeps, so two liquidity pools. So even if we get here, I will be reluctant. But it's our job. I mean, to risk. We risk nothing more than the amount that we put on the risk. In my case, one stop loss is from $75 to $125. It's a fixed stop loss. Or I can also put maximum daily loss limit as one stop loss, which is $200, but I have to have reasons to do it. So maximum stop loss is $200, minimum is $75, which is much more I can lose. And as long as I know this, plus I know that my strategy has an edge of win rate 60% over 40%. So out of 100 trades, 60 trades will win and 40 will lose. Then I can statistically calculate based on probability games that I will be profitable over the period of X trades, longer a period of uh, a higher number of trades, let's say 100 or 1000 trades. I'll be profitable because I also believe in the law of large number, which is the random distribution and the random distribution between winners and lost and losers. It means that the distribution is very random. So when you have 60% probability of winning, it doesn't mean that out of 10 trades, 6 will be winners because there's a random distribution. So out of 100 trades, there's bigger probability like 60 will be winners. But out of 10 trades, that might be like a consecutive loss period of 8 or even 10. All trades may be loser and still the strategy might be working. Okay, so we are retracing. We will probably be buying here. And if we don't manage to buy here, we will be buying lower. I mean, if we're not able, if we are stop out here, we'll be buying lower. So these two areas for buys, this demand and this demand, two demands to buy. I would be very happy to buy from here, but again, look, M5. Liquidity pool after liquidity pool, which is normal, like this liquidity is always built. but not all liquidity is being taken. Not all liquidity is being taken. So, so okay. Now there is no strong inducement on the left, in the left, and also the reaction is providing also no inducement. So the reaction is not like higher, lower highs, lower lows, or anything like that. It's just a straight sell off. In this case, it's pretty challenging to have high probability winning. I'm gonna look at the trade tables and I'm gonna pre-fill Photon Pro in case I would be buying from here. Now I would be able to buy from here, but that would be pretty okay. 4 minutes to London opening. 4 minutes. Mm, we would have to grab this liquidity and then I could consider buying. Yes, let's put it like that. Just grab it and then we are done. This is Judas range. If we grab this liquidity, I will be buying, yeah, at the breakout of this candle. This is 61.8 already mitigated, which is very nice. We are mitigating this demand below 61.8. London 3 minutes, London to open, so it's 2:57 a.m. New York time, which is 7:57 a.m. London times. 3 minutes left to London open. If I buy this now, I would be risking, yeah, so I would be risking, beautiful. And I've taken, and now if we see a reaction, now if I was bull here looking at M15, I would be pretty freaked out. Hmm. So that would be 65. I would buy two contracts, so $130 I would risk to buy two contracts. I would be buying with that kind of risk. That would be 2R, 3R. Yeah, yeah. That would be 68. 140. Yeah, still acceptable. 1 minute left to London open. This is very scary candle. I'll remove Fibonacci. Why the Fibonacci doesn't want to remove normally. Okay, very scary candle. Very scary candle. What will London show? Okay, I need to cancel my order because. Okay, so this is Judas range. Uh, We broke Judas range. This is 11:05, so this is exactly Frankfurt Open. So, okay, I'm gonna remove this Judas range. This is liquidity that we swept here. And now we have a very, very, very interesting situation at M15 because we have LC to A setup. LC to A setup. So first we are inducing buyers, then we are inducing sellers, and at the end we might be going up. We also have the same setup on M5, so I would be buying from M5 after this candle closes as M5. This is first minute, so I have to wait for the candle close. I have to wait for the candle close. I repeat that, said that twice. It means it's important for me. I need to wait for the candle close. This is the rule, and I will not break it. Now, London Open, this is 3 a.m. New York time, 8 a.m. London time, and this is the most important time really now, from 3 to 4 a.m. The first hour of London opening, the first 2 hours, most important, most volatile. Yeah. Okay. I might be able to also enter on M15 as a swing trade like I did yesterday, also profitable. Today also I might be able to just enter M15. If it prints high, I'm gonna enter a buy on M15, unless London will show something else. Yeah, it looks really good. For buy here or lower. Also, I like that this scare candle is definitely inducing and manipulating all the bulls, sorry, all the bears to sell. It's like a reversal candle, and now all the bears are excited to sell, and all the bears are excited to sell. Uh, Whereas it might be a manipulation. If we think about Elliott waves that I used to use at the very beginning, then the impulsive trend consists of 5 waves. One, two, three, four, five, and the fourth wave should be the most significant, or more, sorry, the more significant than the second one. Okay, this is the end of M5, and I'm gonna take a risk. This is 3 contracts. This is 102 contracts. No, 3 is too much. 2 contracts. 2 contracts, and yeah, that's gonna be a $90 risk, which is good. $90 risk. LC2A. Unfortunately, no, it's not valid. No, 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 no. We didn't. No, no. Why did I want to buy it here? We don't mitigate anything. We need to mitigate M5, M15, 1 hour. We need to mitigate some demand. Oof, what a mistake I could have made. That would be against our methodology. So now we are interested to buy from here, not from there. It must be mitigation. No way. We were interested to buy somewhere here because that was fresh demand, but there is no demand anymore. There is no demand anymore. No, the next M15 choke is here. And the price may react anyhow, may skyrocket now, but I don't care. I want to trade according to my process, my trading plan. This is M15 choke, but also M5 choke at the same time, at this moment. Okay, so everybody got excited with this manipulation, but this manipulation maybe was only used to grab the liquidity, which is here and here. Yeah, this liquidity. This is 1H liquidity that is grabbed. So now we should see them on M15. These two liquidities. We grabbed, we swept these buy side liquidities, and then we're providing the reaction. The reaction is bearish. We are kind of mitigating this line, previous day high, you see here. But until we mitigate this demand, that is high probability demand, this is a flip demand because the price swept the liquidity on the left, tried to break this high, didn't manage, went back, and then it broke it with a very, very, very strong momentum. So this supply that previously was defending now changed into demand, and it's basically we could treat M15 equals 1 hour. So even if we don't mitigate M15, I will be able to trade from here as long as we mitigate 1 hour. Do I want to go to 1M and see some sort of reaction first before I enter? No, I'll be entering on M5 breakout. I'm just entering M5 breakouts. I'll be entering higher here. And that will be already confirmed on lower time frame. But first mitigation. I want to see mitigation. This is not, here is still nothing. Here is still nothing. So if we go up now, then I'm staying on the platform and waving and say goodbye. Go without me. I will catch another train another time because I don't want to risk here. Even if I would like to risk and buy from here, that would be against my trading plan. And this is more important for me to trade to my trading plan because I'm building my edge. And when I am building my edge, the robotic execution and validity and valid trades are important, not this. Okay, now we have. But this is the beginning of M5, so we need to wait for the candle finish cleaning. And the candle may finish cleaning. And that would be actually possible on M15 as well, because we can consider this as the mitigation of 1H, which is valid for us to start looking for buys. And this is M15 here on the left. And when the regardless how the printing finish, if it doesn't really print higher than here, that will be, yeah, that will be trade, something like that. Yeah, I will be able, I will be like, I would, I would be happy to close this trade before the mitigation because you never know. Oh, nice. And we go further mitigating the demand. Now, now the now the mitigation is quite strong. Look at this reaction here. So we don't know what's going on. Why is it so strong? And there's no manipulation here on the way. But we're still willing to buy it at M5. We have 3 minutes finish, 3 minutes to finish printing. We'll be able to buy with two contracts here, $120 or M15 here. Mm, so I'm gonna leave M15 here because this makes the LC2A setup like it. LC2A. So I'll just leave for now. We have 2 minutes left. Okay, let's focus now. Let's have a look at the higher time frame, how it looks like, and it looks good. So we have a push, then we have strong push, then we have mitigation of this demand, and then from this demand uh, we can expect a reaction. So this objective is now being fulfilled of mitigating this demand, and this changes into tick. We'll do it in a second. We just need to focus now. We still have some time, so we are going to use the tick icon, tick and tick, blue, style, blue. Okay, it's no more, yeah, this is done. Now, where are we here? And we are printing, yeah, 1 minute left. This is 58, so two contracts. So buy two, and we will be ready to buy at the breakout of this candle with 50, so that's going to be $120. Um, we will be targeting for our, yeah. Okay, here we go. And we're in $20. Okay. We're in. We have take profit $470 and stop loss $118. Stop loss is not perfect because it's just before this demand here. But let's assume that this is the end of the correction now. Let's assume that this correction is over. It's a large correction and it's a larger than this. You see, 1, 2, 3, 4, and now we are going north. If we measure with Fibonacci, we measure all of this So we just mitigated 50%. We just mitigated 50%, but if we measure the last impulse, it's exactly 61.8. This where we so it's a cluster of two figures, which I normally don't do. I don't use it as a magical number anymore, but here we have cluster of 50 and 61.8. Pretty obvious to reverse from it, but isn't it trap? This is LC2A. I am okay. So this is a valid entry, and I am going to make a entry uh, to the journal. So this is trade number 17. I'll write it down here. Trade number 17. 17 LC2A long LC2A Photon Pro. Yeah. Okay. Here, visibility not M15 because it's M5. So yeah. This is M5. Okay. Now, journal. Trade number 17. Trade number 17. Okay, pro. And this is November 19th. LC2A. Direction long. Bias pro. Order flow pro. And then validity between 2 and 6. Entry from M5 POI. Well, we enter from 1H POI, so it doesn't make a difference. Target M5 POI, and we target liquidity, which is also valid. I have to, yeah, I have to modify the setup target with liquidity. Sorry, I just wrote it in my journal. So RR minimum 2 and valid entry model, yes. Now confluences, entry from 1H POI, yes. Entry from 1H, high quality POI. Is that high quality POI? No, because high quality is when the market is when the POI has got one of these two, sorry, minimum two factors out of four. Number one, a liquidity sweep. Number two, strong reaction after liquidity. So it has a strong reaction here with fair value gap, but it didn't sweep liquidity. So there is a strong reaction. Number three, it's priced, and it is actually because it's in a 50% lower, it's cheap here. Okay, so there are two, it's a high quality, yeah. And then number four is that it's nested in a higher time frame. This is nested in, no, it's not nested in higher time frame. It is just 1H POI. If it mitigated M5, then we would be assessing that from this perspective, it is not. But there it has two, so it's high quality. Okay, high quality 1H, but it's not high quality M5 because it's not M5, it's just 1H. Okay, one HPOI to target? No, just liquidity to target, really. So, and liquidity, no liquidity pool behind. Mm, nothing really specific. I mean, this is here, this is liquidity pool, and it's pretty visible, but I would say no liquidity pool behind. A liquidity to target, yes. So we have 2, 4, 5, 6. We have total number of 6, and it gives setup A. Not too bad. Okay, so we have entry. Okay, we have entry. Now, where to put stop loss? Stop loss will be here, and then I didn't really put the liquidity. That is pretty visible, pretty important. M15 available here. Okay, so at least the price will be attracted to sweep this liquidity here. I'm gonna make this thing. Okay, so where's my stop loss? Where is it going to be? My stop loss is going to be after reaching M5 POI, the extreme M5 POI, which is this. So I don't know what I said. I mean, what I meant was stop loss to break even, okay? I'm gonna put stop loss to break even after price reaching this level. So I'm gonna write down here as a text, um, stop loss to break even. Okay. Mm, okay, nice reaction. Yeah, there was a huge volume imbalance here in this move. It's a really strong move. I wonder what volume would it be there, but I don't look at volume anymore. But it's a strong, really strong move up to here. This is volume imbalance, so this is additional sticky things for the price to retrace. I'm thinking if I should put stop loss to break even after, yeah, after reaching, okay, after reaching it's okay. I'm not gonna leave it as it is. Okay, I'm gonna close the charts now, not to touch anything, and I'm gonna monitor the market every 15 minutes now. Our job is done for this trade and just monitoring it. So I will be turning on the stream whenever something significant happens. Okay, so this is 3 o'clock, no, 4 o'clock. This is 4 o'clock or 3:57 in New York time. This is the end of the first hour of London opening. Price is pretty swinging, and this is the entry I took. And when the price reversed rapidly here, I got concerned, and then the price went back again, but started also reversing. So I closed the price at this bar here. That was my manual stop loss to break even. And this is something um, this is the violation of the rule because once enter, I should just allow the price to hit stop loss. I shouldn't be making these decisions like that. Um, I didn't like price action here after opening with this steep decrease, but I did what I did, and that was again the stop loss management that was against the rules. I'm gonna make uh, yeah, I'm gonna make a reflection on this because this is something that I should be fulfilling this week as I didn't, and the price reversed here or reacted quite sharply from here, and we can see now it's fighting. So yeah, that's it. And now the next possible trade would be when we look at M15, when we get to lower levels, when we get to these levels here. So we'll be looking for some potential buys from that levels. Yeah, for now, we stop the stream, and when the situation happens, I'm gonna restart it. Have a look what's going on here, guys. Have a look what's going on. Have a look what's going on here. So we took the trade here. Let me summarize once again. So pre-London session. Pre-London session, that was exactly 10 o'clock. So here, this is one, and this is Frankfurt Open. We are retracing, and we buys from here, from this demand, especially attractive when buy side liquidity is not swept. It's not swept, so we mitigated this level. It ticked, and then here we were looking for buys. So when we got to this level, that was at a very beginning of London opening. So after first hour of Frankfurt, uh, after first hour of Frankfurt and beginning of London, then we moved to lower time frame. So exactly this was this. Okay. So we were moving here, and this is London opening. Um, we are reaching the demand, and then we're going to M5 looking for the occasion. We already see that we have LC2A occasion here to buy. So we are buying after this candle at 10 minutes um, past London opening. We buy here. Okay, and then the first reaction is quite bullish. Then the next M15 candle is very bearish. After this candle, I saw what's going on, and then I panicked. I got very emotional, and I started to imagine that price would like to mitigate this demand here because it hasn't mitigated it previously. So I thought that price would be interested to mitigate this demand, and it could, but it didn't. Instead, price uh, continue fighting on another M5 and another M15. Look at M15 here. It continued fighting, then it went up, then it went down again. So this half an hour was just auction, was fighting for the direction. And then finally, after first hour, London finish trading. So 5 past 4 a.m. It decided on the direction. So it went up, it broke the structure, and then it started ranging until the last moment, which is this candle and this candle and this candle, that is reaching and finally sweeping the liquidity that we put here as an attractive level. Okay, this liquidity is a strong magnet for buyers. Consider selling after sweeping all buy side liquidity. We're just sweeping this liquidity. So I will mark it as 1H taken. Okay, so we swept all the liquidity all the way. One, two, three. All the liquidity swept. There is only a last level that was left, which is the swing week high that is waiting to be swept, or it will be respected. We don't know because our take profit was before the last liquidity level. That was that 4 or 5? Okay, let's see a lower time frame. That was 4R. That was 4R. Let me make this liquidity visible at M15 and M5. It is visible at M15 and M5. Yeah. Okay. So what is going on here? So this is what happened. We saw a strong reaction pre-market. We were waiting for the pullback, and then we spot a beautiful reaction, a beautiful occasion at the pullback, high probability A setup, and then we switched to break even. Oh, look at this trade. Look at this trade. Look at this trade. We switched to break even here because we got scared, and then we just shoot out. Okay, so I violated the rule of stop loss management, and that was again and again and again. Oh my goodness, look at this. Now it is broken. I mean, the hour must finish, must close above. The hour must close above this level so that I classify it as broken. But the level is broken anyway, at least with the liquidity sweep. So yeah, what is the conclusion? There are two conclusions. Why the stop loss management is failing. Oh my goodness, look at this shootout. What the heck is going on? Some panic news. I don't even look at the news at the moment. I just follow the chart. Yeah, so what happened here that it failed, the stop loss management? Well, this happened that I am still not sure and 100% confident about my edge, which means that I am afraid of losing. Because if I was sure about my edge, I would know that let's say my edge is 60% win rate, which is 6 out of 10 trades are profitable. So if I am sure about my edge, I know that 6 out of 10, so 6 are profitable, four are losers. If I was sure about that, I would have statistical advantage that over a large period of time or a large number of trades, let's say over not 10, but let's say 100 trades, my statistical advantage would provide me 60% of winners. And I don't know the sequence of the winners and losers. So out of 10 trades, not always 6 will be winners. But I know that over 100 trades, more or less 60 will be winners. And if I knew this, if I was like 100% sure about that, I wouldn't really bother about losers. I would just uh, leave my stop loss on its place and wouldn't bother. I would just enter a trade, shut up, take profit, and just forget about the trade. Set and forget. This is what I would be doing if I was sure about my trade, my edge, but my edge is still being tested. It has been tested by others, but I need to test it for myself to have 100% confidence. So in that case, I would be always afraid of losing. I would be always afraid of uh, managing the trades. I would be always afraid and anxious while entering the trade and also exiting. So it seems like finding out the edge is crucial, and I'm working it, but it is clearly disturbing in trade management. What are the solutions? There are two solutions. I may either set up the trade, and once I enter a trade, I just finish trading for the day. I just close the platform and I leave the computer, set up the stop loss, take profit, and that's it. Another thing is that I may monitor the market every 15 minutes, which is now. I monitor every 15 minutes, which is apparently it's too often that I look at the market, or every 1 hour I could monitor. If I had monitored every 1 hour, when I enter here, that was 10 past 12 Dubai time. So 1 o'clock would be here. I would look at the market. I would probably close it manually too, because look at this candle here. I would probably close it too. Maybe maybe it is worth it to use alert. I don't know. I love the pre-market analysis on the higher time frame. Everything was working out as I expected. I was so easy trade to take. Everything was bullish. My bias was bullish. Order flow was bullish. That was so easy trade. All I had to do is to execute it well. I executed entry very well, but I didn't execute stop loss management. Yeah, good job in general. Cheer up. That was a good trade and a good lesson. Good lesson. The lesson that concluded with um, I'm very afraid to say that, but I'm very close to making decision just to enter a trade and forget. Enter and forget. But then what would be the downturn of that move is when I enter the trade and I forget, then I might be stopped out or other opportunities may happen and I might lose that opportunity only because I decided not to look at the market. Okay, that is definitely a lesson from last week, a lesson for this week, all focused on stop loss management, I guess, because clearly pre-market analysis and choosing the direction, choosing the location of the trade is good, but then execution is good in terms of entering, execution is good in terms of putting stop loss and take profit, but then stop loss management. Okay, all right. Case study done, and this is the end of the trading day for today. I'm pretty emotional about it, yet grateful for the lesson and happy with this trade in general. Happy because everything was pretty uh, well done apart from stop loss management. So okay, market provides opportunities like this every single day, and I will have a lot of opportunities in the future, so the money is there waiting for me. Every next day, every next session provides so many opportunities. So yeah, I finish it with positive, constructive, educational tone, and yeah, I will just chill out now, going to the gym and try to push myself a little bit harder today at the gym. So yeah, um, yeah, I will record tomorrow. So yeah, that's gonna be it.